Joining us to discuss the latest developments on the Let's Go Lithium project is Judson Coulter of Rover Metals. Mr. Coulter, thank you for joining us today, sir.
Hey, Maurice, thank you for having me.
Oh, pleasure to have you. Before we begin, Mr. Coulter, please introduce us to Rover Metals and the exciting opportunity the company presents to shareholders.
Yeah, Rover Metals, we're a critical minerals company just exclusive to the jurisdictions of the United States and Canada. And right now, we've got our signature asset, which is new. I mean, we'll talk about that today, but the LOI was moved to a definitive agreement and finalized last week. So our new signature project is and flagship project is this Let's Go Lithium project right in the heartland there in Nevada. So great project, and we also have another great asset in Northern Canada, which is a zinc-copper project. And really, we think we're well poised for growth, for our industry for the next 10 to 20 years.
Well, you stole some of my thunder there, but take us to Nevada, where Rover Metals has a big announcement for shareholders on the 6,000-acre Let's Go Lithium project, which, of course, I'm sorry, you just referenced is the LOI. Mr. Coulter, for someone new to Rover Metals, can you please reacquaint us with the value proposition on the Let's Go Lithium project and how Rover Metals is positioning shareholders in becoming an emerging energy company?
Yeah, no, I think with this pivot into lithium, which, the LOI was signed in September, but moving this now to a finalized acquisition, we've just gone from a very competitive junior mining sector where, whether it's gold or silver or copper, you've got hundreds and thousands of competitors to now the value proposition being we're in the state of Nevada, which is agnostic, to any, just as being cheaper across any mineral. So we've just lowered our operating and exploration costs by 80%, whether it be, lithium or copper or gold or silver. Lithium, Nevada is just, sort of one of the best spots in the world to be working in mining. But I've also just like to point out that we now just have a handful of competitors. Like this project in terms of the value add to shareholders is within sort of that infamous, Southwest lithium jurisdiction in the state of Nevada. And that's where, the only producing lithium mine in North America, which is that Albemarle. I mean, that does happen to be a brine mine, but all the sort of next gen, I'll call them lithium 2.0 companies, which have these claystone deposits, they're all, right sort of in our backyard. And this project itself, what's I think really exciting about it is this one just happens to be the closest one of all the bunch to Las Vegas, which is just a great hub for logistics. Just all the flights that are going in and out, direct access. So the project itself is just about an hour outside of Las Vegas. And couldn't be happier to have closed the deal last week.
Well, congratulations to you and the team, sir. Now, the lithium price has been surging, far outpacing precious and base metals. Can you touch on the supply and demand forecast and address what is causing the lithium price to skyrocket?
Well, I think it's just right now we're seeing a couple factors. I mean, China's, controlling supply, but it's also just a huge ramp up for the U.S. automotive sector for next year. Not to mention, Europe. I mean, Europe itself is also starting. Look at what Porsche's bringing to market with the Taycan and so on and so forth. So it's just really, I think we're seeing the demand that's coming. I mean, we're the type of data that we're relying on for things like this project and its timing. Benchmark Mineral Intelligence out of the UK, they're sort of considered to be the foremost expert on lithium data. And I just thought it was very interesting, their prediction that even with all the brownfields projects, including projects that are currently on care and maintenance in lithium, if you add in 50 worldwide greenfields projects and make the assumption that all of those greenfields go into production, still in 2026, like halfway through 2026, there's still going to be a supply shortfall. And I think we live in a world of investment banking and hedge funds, and I think the market is just aware of the fact that, 2026 isn't that far away. Plus, you've got new laws in the US that says starting in 2 months or a month and a half in 2023, 30% of all lithium has to be purchased in North America by the automotive companies, the big four plus Tesla. Like, if they're going to continue to receive their manufacturing tax credit and pass on an individual consumer tax credit, 30%, that's next year. And then in 2027, it scales up. So I think that's also, it's not just China. I think it's also just, pure metrics on demand.
Yeah, and earlier you referenced the brine lithium and then claystone lithium. Last interview, we covered both of those. For someone who missed that interview, can you share the distinction between the two? And of course, the advantages of having the claystone lithium project as well.
Yeah, so I think a lot of people have seen the traditional brine, pictures of is what I meant. That traditional brine mining method in places like Chile and Argentina, where you just see miles of like these they kind of look like salt flats, right? Where the lithium, like brine, is just kind of evaporated to surface, and they just flood it. It's like a kind of rice farming in Asia. They just flood it with millions of gallons of water, right? Super water intensive process. So this is different. We're following the footsteps of the companies that are in claystone that are 3 to 4 years ahead of us, where they're at the pre-feasibility stage and they've got pilot plants. And so sulfuric acid is a big ingredient, as is water. Water is still used, but for one, it's less water intensive. But it's also quite interesting that one of the byproducts, I think, is Epsom salt. So there's I think that's one of the things that comes out of the process. But yeah, I mean, I think that is the essentially, in Nevada, of course, water is important. On our particular project, we've got, there's water wells that's what we've used, the USGS historic water well drilling. That's what we've used to understand the size of the ore body on our project. And so we just happen to know that there's an abundance of water where we're located, which is good news for us. And I think we'll be successful when the time comes for us to apply for those water rights.
How about the recovery rate there?
Well, I think that across the board, so we've got the milling rate with the milling recovery rate, and then you've got your refinery grade, right? So those are two separate things. But right now, what's sort of been a good benchmark to get to the end product, which is battery grade lithium carbonate as it's referred to, and that's got to be 99.5% pure and above. So if the companies that are getting that level of refined quality seem to have an average mill recovery rate of about 83%, or 80 to 85, sort of. I've looked at 4 companies that have that in their pre-feasibility. Again, these are all companies in this southwest lithium jurisdiction of Nevada. So across the board, that's sort of where we expect to be. But backing up, when these companies started 3 and 4 years ago, they were getting surface samples of 400 or 500 ppm lithiums at surface, and so nothing is different about what we're doing. That's if you look at our news releases and if you look at our surface sampling, those are the grades that we're getting as well. So I think we're within a giant sort of a dried up lake area. That's sort of the genetic model, if you will, where the mountains are nearby, and this is an old lake bed, as much as Nevada is, right? And so I think there's, for a project that is, maybe, let's just say, 75, 100 miles away, in some of the more proven instances, there's, Mother Nature is quite vast, as and so I just think the likelihood that if we're getting those grades on surface for us to be able to follow lockstep. There's also, I can just kind of share with with the listener, there's a historic Franklin Wells hectorite deposit, which is just across the border from this project. I mean, it's just, I'm talking like a couple miles away. And that produced before lithium was a thing, and lithium was just a byproduct. But the byproduct of when that mine produced historically, they were getting like 2,200 ppm sort of lithium that they just had no use for, right? So again, that's surface samples, nearby historic mine. We think we've got all the right ingredients.
Now, what work has been conducted on the Let's Go Lithium project to date, and what is your team working on now?
Yeah, no, that's a good way to parlay from sort of where I just kind of was talking. So I think we've got um, the historic water wells for one. There's the whole area we're in has had a bunch of water wells drilled. There's a private clay miner that still produces drill mud. They've been producing drill mud since 1966. So there was just there's a bunch of infrastructure and work because of that neighbor that we have to our project. But on our project in particular, there was 4 water wells that were drilled. It logged the geology below surface. So it logged where the clay body starts and where it finishes. And based on that, starting in the highest, it's funny enough, there actually is a water well where we've pulled our highest grade surface sample. So right in that particular area, I could tell you that the clay body starts 6 meters below surface. And it's about 90 meters on average across our 6,000 acres, because again, there was 4 water wells across this sort of equally spread out between our 6,000 acres. And so that's, gives us a sense of, the potential, the blue sky on this. It's never had a drill program for lithium. The USGS water wells, they didn't sample and send stuff in for the assays. They just kind of, did a logging a core where they could say, okay, well, this was like gravel and then clay. I mean, that's all they did was log the core, right? So now, that's the potential. And then, obviously we've done our surface sampling where we've got multiple samples from, a systematic grid across the property. So, yeah, I mean, what it really needs is it needs an RC drill program. It needs about 1,200 meters of drilling, each hole to, an average depth of about 60 meters. And, that would just kind of put it right into the center of that clay pit, or not that clay. It is an open pit potential, but that clay ore body. And so that's what we're looking to do for 2023.
When in 2023 is your team looking to begin drilling?
Well, I think the reality is just we need to raise a little bit more money. We're in the middle of a financing right now. The market is the market. I mean, this is kind of a slow time of year anyways. The good news is we've, done a top up there was an acquisition payment here on this project, as well as just, we needed as a company to top up on G&A. So I think here we are in, mid-November. It just really depends on where the chips land, I think, with the financing at month end. That being said, Q1 is always a strong always a strong quarter for our sector. A lot of junior miners. There's always a bit of a run on those stocks and the ability to finance in Q1. And so I think we'll certainly, if we're not able to secure our drill money in the next couple of weeks, I think we'll certainly test the markets in Q1. And I honestly, given the direction lithium is going, it's just a matter of when for us. It's not a matter of if. So I do expect us to be successful on drilling the project sometime in 2023.
In closing, sir, what would you like to say to shareholders?
Well, yeah, I mean, if you don't have lithium in your portfolio, I think you certainly would want some lithium stock in your portfolio. I think this is a much better sector than when everybody rushed into the marijuana sector thinking that was going to be, or even crypto. Like, this is something where the demand that, intelligence research houses like Benchmark, like feel free to subscribe to Benchmark and read their data too. But this is demand that is forecasted like into 2060. Like this is like lithium is in your phones, it's in cars, whether cars, maybe they just go hybrid where it's gas and electric. Point is there's going to be a sustained need for lithium. There's just not enough companies. So, I mean, we're an affordable stock to be able to get in. That's a lot of course, the proven ones are expensive. Like the companies that have got proven 2 million tons plus of lithium carbonate equivalent. Well, those are dollar stocks. So I think for us, we're at that pre-discovery, pre-resource disclosure. It's an exciting time, I think, to do your research on lithium stocks and to get involved at the start of the cycle.
Last question. What did I forget to ask?
I think that's everything, Maurice. I mean, I just would add that we've talked about this lithium project on your show slash on your channel, but the deal itself just got final approval from the stock exchange on Friday. So that means we have it, and the deal's done, so I think now I was obviously very confident that we were going to, be able to get it across the finish line when we talked 3 weeks ago, but now it's done. And, it's off to drilling as soon as we've got our drill money.
Oh, looking forward to it. Mr. Coulter, it's been a pleasure speaking with you today. Wishing you and Rover Metals the absolute best, sir.
Hey, thanks so much, Maurice. Appreciate it.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.